Nikkei, which is actually the top, loser, at least in the Asian markets, down almost 1%. Kospi 2 is trading with a cut of almost 0.8%.
मोदी के लिए आपके हित सर्वोपरि है.
25,153 on the upside, 24,702 on the downside.
So hopeful that very soon they will come on a negotiating table.
24,900. So it's about a 0.25% cut there.
0.5% to 0.75% cut in the growth rate of the Indian economy.
This will provide a level playing field for cell manufacturers.
Lord Ganesha could, as they call it, Vignaharta. So you'd hope that their pains are alleviated for sure, at least for today's session.
Effective from 12:01 a.m. 27th of August, which is 9:30 a.m. India time.
The government is taking steps to stimulate domestic economy.
In fact, now it's at the day's high, so the recovery that we would see will come in from the FMCG space.
Well, that was the day so far. Things are looking weak for the markets. We're now down 200 points on the Nifty. The Nifty is at 24,750. The sensex is staying close to about 700 points. But we've got 1 hour to go. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema, with me, Nigel and Mangalam. Hi, boys.
Well, hi. It's a truncated week, but the bulls clearly are very, very nervous getting into that midweek holiday. And then you have expiry-related factor as well. So that's compounding the problem, right? And getting into the past weekend, there was that optimism. Maybe we'll see some kind of deal. That's not come about. So I think this trade tariff worry continues to weigh.
You call it the truncated week. It can be called a Trump-gated week as well, given the sort of uncertainty that we're seeing right now and the tariffs that have increased. But amidst all of this, one trade is definitely playing out, which is that of domestic consumption.
Yes.
Even yesterday, we had some of these export-facing names do well, only flattered to deceive. Right now, we have Britannia, which has moved higher. We have Maruti Suzuki, which has moved higher. HUL has moved higher. ITC, Hero MotoCorp, Asian Paints. So all the domestic consumption-focused names are actually at the higher end of today's trading range, even as the others are seeing extended sell-off. So it's an action-packed closing bell coming up in the final hour of trade. The stocks are feeling the heat on the back of Trump's tariff tirade. Nifty consistently hovering around 24,000 levels. Broader markets underperforming sharply. Meanwhile, it's red across sectors, barring the consumption pack, with the likes of Sun Pharma and Zydus Life reacting to bearish brokerage notes from the house of BofA and Investec. Details coming up just a bit, and the spotlight on MSCI index reject, likely inclusion for the likes of Vishal Megamart, Swiggy, Wari Energies, Sona BLW and Thermax could be on their way out. You'll get the estimates on flows and outflows, inflows and outflows. Two-wheeler maker Ola Electric revs up its PLI incentives, an impact analysis on how this would benefit their financials.
And it doesn't help that Europe is also down now. So the CAC, that's the French index, has plummeted nearly about 2%. But here there is country-specific news. The government potentially faces a no-confidence motion, so that's hurting the French index. There is a possibility next month for a no-confidence vote in the government. But even the other markets, that's the DAX and the FTSE, are down close to about 0.5%. So global cues today have been muted. And, as we said, there are a lot of important cues lining up, starting with 9:30 a.m. tomorrow. We will have the Trump tariffs, 50% coming into effect, additional 25%. Then NVIDIA earnings. Then on Friday, you've got Reliance AGM plus the Q1 GDP print, and then some, U.S. economic data as well. So all that's hurting. Mid-cap index is down close to about 1.3%. Ashish Kyal is now joining in with a few closing strategies. Ashish, headed lower, 200 points gone. What would the approach be?
Hi, afternoon to you and all the viewers. Yes, we can clearly see that since morning, Nifty has not managed to give any kind of a positive early close above the prior candle high, and that's keeping the tone on the sell side. And also, we are in the gap area. So there was a very big gap which was created on 18th of August, and post that price have been consolidating. So we are in that gap area. If we break below the low of 24,740, then there can be some short-term selling pressure towards 24,650 odd levels. And I think right now the approach is sell on rise, given that we are not managing to sustain that gap as of now.
And when does this negative trend get cancelled out, Ashish? If you could help us out with levels. If you're shorting the index, what is the level you're looking at? And if you had to put a stop loss, what level would you, change this sell on rise approach?
On the upside, I think 24,890 is where the hourly 20 average is lying. So I think 24,890 to 24,920 is the zone. If price manages to move back above that, that's also the opening tick where we saw in today's opening hour candle. So if we manage to move back about 24,890, 24,920, then we can expect some kind of positivity. Until then, so the strategy can be very simple. Use pullback towards 24,800, 24,820 as a selling opportunity, 24,920 is a stop loss, and then aiming for around 24,650 odd levels.
All right. Any individual stock picks that you have at this live?
Yes, on individual stock picks, there are still stock-specific action that has continued. One stock pick is Granules India. We can clearly see huge volumes since morning. There is going to be a 10 DMA crossover happening, 20 DMA support, and prices are bouncing back. Good reversal pattern. Risk reward looks good. One can create long positions here. Expecting a move towards the level of 490 on the upside and maintain a stop loss of 460 on the downside. And the next stock pick is going to be on Linde India. Again, it has found support multiple times at 6,200. Bounced back from there, forming a good bullish candle. Volumes are huge right now. And we can expect a move towards the level of around 6,900 on the upside positionally. And on the downside, one can maintain a stop loss for the stock at 6,320.
All right, Ashish, thanks a lot for that. So those are a couple of stock picks that he's put out for us. I'm just putting the spotlight once again on the FMCG pack, and there are a couple of reasons for that. The biggest one is the GST rationalization that will happen. We have Britannia, which is up by around 4%, HUL, Nestle, all of them doing well. Amidst all of this, Colgate is the one which is not doing too well. And these are not my news lines. This is something that Timsy has gathered from her sources in the finance ministry. And she's found out that maybe the GST rate on toothpaste remains at 18%, does not come down at 5%. So that may come across as, a softener or a weakener for something like a Colgate. Whereas on the other hand, biscuits, which are considered to be items of mass consumption, out there the GST rate could go down from 18% all the way down to 5%. And that would actually make a difference because, these products actually are fairly price sensitive. And immediately as the prices come down, you could see a volume uptick, and that's what the street is betting on as well. So the current rate on toothpaste, 18%, proposed rate is 5 to 18. Remove that 5, as Timsy tells us, it could be 18 itself. Biscuits would be 5, soaps, hair oil, all the others could be anywhere between 5 to 18. But be that as it may, for the consumption space itself, things are improving. We had heard from all the managements. And amidst all of this, the one stock that really stands out on the way up is ITC. Why do I say that? Because all parts of their business are doing well. In the first quarter, the tobacco business margins were lower. But turns out that maybe the current crop cycle is indicating that those leaf tobacco prices would moderate going forward. Their FMCG business would benefit from the uptick in consumption, but at the same time, there is early signs of recovery because of all the factors that we are talking about. The interest rate cuts that have come in, the income tax rate cuts which have come in, the proposed pay cycle that will come by as well. So those things would benefit. And finally, paperboards, which was a business which was underperforming for ITC for the last 8 or 9 quarters, I remember. They have around 80 to 85% of their revenues coming in from the virgin paperboard business, which is the one that benefits from the minimum import price that has been imposed on virgin paperboards. So those factors doing well for ITC, all things coming together at a time when the stock is trading at 19, 20 times 1 year forward earnings. So a lot of these consumption stocks actually doing extremely well. Also because the focus now moves domestic. Tomorrow is Ganesh Chaturthi, the harbinger of all the other festivals that we see from now on. So there will be Ganesh Chaturthi, thereafter Navratri, Dashera, Diwali, going all the way up to Christmas.
Okay, all right, Maglam, thanks a lot for that. Dharmesh, good afternoon, good to see you in Dharmesh. You're looking forward to the holiday, but it's going to be a little tensed on, right, going by today's finish. That said, how are you going to be, how are you viewing the consumption basket and what do you like?
Yeah, good afternoon, Nigel. Getting so the festivities. Yeah, definitely. I mean, it would be a tough holiday to go into, sensing how the entire, geopolitical and the tariff saga is panning out. Coming to the consumption basket, I think incrementally, definitely, it's going to be a bit of a volume booster because in rural area and semi-urban area, this slight decline in the prices does help consumption volume, maybe a 1.5 to 2% kind of a volume uptake can be seen out the entire space. Having said that, let's not forget that, all the stock prices are at a very elevated, higher multiple levels of the valuation count. And most of them are trading anywhere between 55 to 70 times of PE multiple on a trailing basis. And 1 year forward, it can be 10% lower at for 50 to 55 times PER. See, one thing one has to answer in this environment, one can get an upside of 5-7%. But if you can look at these companies as a, say, 15% kind of a CAGR on stock price for the next 3 years, then you have hardly any choices out there. And here I go by Banglam. ITC, I think, looks fairly valued, quite cheap compared to the other competitors in the play. And all the valuation vectors which goes into the valuation of ITC is working fine with them. Cigarette, I think the GST after the rationalization 2.0 should be tax neutral. There should not be any, tariff related issue out there. And let's have this in mind that in cigarettes in India, it's still allowed to be sold, whereas vaping is not. So, but definitely government has an eye on the kind of taxation which comes to them from the cigarettes. So ITC to my mind looks pretty attractive, and I have recommended this on your channel earlier as well. And here you can see 25-30% kind of stock price appreciation in next say 1 year or so. So ITC is the stock which we are recommending to our clients.
Right, ITC is a stock you're recommending to your clients. What about some of these domestic automakers as well? Maruti is a stock which has hit a record high today. We are also seeing some traction in Hero MotoCorp. Eicher Motors is up around 3.5%. Do you think the consumption boom will actually extend to the automakers as well and early entry-level two-wheelers?
Yes, Mangalam. If you see, July numbers of most of the two-wheelers, especially, and Hero MotoCorp, which cut to the entry-level segment, it was 51% kind of a volume growth, and 20% of that volume growth came from the domestic sales. So things were, picking up, but just because of this GST announcement, what we are getting a feel from the dealers is that, there has been a delay in the purchasing. It's shifted to now. Post the GST announcement will come through, then people will go in for buying their new bikes or cars, because it's a substantial kind of a reduction which will happen in the net cash outflow which you are going to have when you are buying your assets. So there we are constructive, and there I think the topic still remains Hero MotoCorp, though the price has moved up quite significantly, but still I think 10-15% kind of a scope is there in Hero MotoCorp along with TVS Motor. So these two picks are looking well. We are avoiding Bajaj Auto because of its exposure to the international market, and it's in the premium segment. One caveat which I would like to highlight, it's a general assumption of the market that things which are falling in say 28% category will come to 18%, and 12% category will go to 5%. So you don't know, like premium cars can go to sin of like GST rate of 40%. There can be premium bikes which can migrate to that level. So that's somewhere some compensation has to be made for this tax forgo which the government is doing. So Bajaj Auto we are not very constructive on, but yes, Hero and TVS looks fairly placed to capture this opportunity.
In fact, today, Ather and Ola are also higher in trade. Both the stocks are up nearly about 5%. And Ola Electric has said that the company has secured a PLI certification for its Gen 3 scooter portfolio, which forms over 50% of their portfolio. And once you get that certificate, you are eligible for PLI benefits, which range between 13 to 18% of the overall value. But let's talk about Pharma. Sun Pharma is under pressure. Zydus is in news. Ekta joins in with the details.
Well, yes, pharma stocks are in focus because there were some comments which came in from the US President Trump as well, mainly focused towards innovative drugs, but maybe it could have perturbed a little bit of sentiment. So the US President has said that he will look to slash drug prices between 1,400 to 1,500%. Quote unquote, going to do a number on costs of drugs in the US. And remember that the statement comes a month after Trump sent letters to pharma companies such as J&J, Novartis, Merck, Pfizer, etc. He's also set a 29 September deadline to lower drug prices. The demand is to extend the most favored nations pricing to all Medicaid patients. Earlier this month, remember that the US President Trump said tariffs on imported pharma products can reach as high as 250%. So that's probably shaken a little bit of sentiment, because the move is to eventually move manufacturing back to the US. Now, BofA Securities separately has written on Sun Pharma. They've downgraded the stock to underperform. They've cut the target price. According to them, they expect slower revenue ramp up from new launches compared to consensus. Sun may pursue further specialty acquisitions, but the upside, according to them, is already priced in. Most favored nation clause could continue to weigh on Illumia, which is one of their key drugs in the specialty portfolio. Investec has written on Zydus. They have a sell target price of 940. According to them, the valuation is now unfavorable. And the valuation, and it's an earnings risk as well. Mirabegron, ER, and Revlimid generic, 2 drugs together contribute to around 35% of FY26 EBITDA, and both face risks of disappearing without backup products, according to them.
Alrighty, thanks a lot for that. So those are a couple of these stocks which are lower right now. Dharmesh, do you track Sun Pharma and Zydus? Do you have a view on them?
Yes, on Pharma we do track, but I mean the numbers were not that great for the Q1. And going forward, I think it would be a steady state of around 12 to 15% kind of a compounding on the top line side with stable margins, because input prices have been quite benign for Sun Pharma. The only problem is this news flow of Mr. Trump coming in and going out regarding the tariff levels, and the fear psychosis which he is creating is a disturbing news. So I think stock price action would be a difficult. It will be reacting to the news flows. But pharma as a whole space, most of them are either into generic or API or CDMO kind of a player. So I think with the steady state of 17-18% kind of a growth, most of the pharma companies came out with a very good set of numbers, be it Ares Life Sciences, Mankind Pharma, and others in the same bracket. Lupin is one of the counter which came out with a strong set of numbers. So that's likely to continue. So the strategy here is for trading purposes. Whenever there is a decline of say 5-7% on stock prices, it's a good opportunity to get into it. And then again, because news flows will keep on surrounding them, you should take your profits on 10-11%. We don't see it as a as an investment bet for next 1.5 to 2 years, given the context in which these stocks are trading.
What about Protean eGov? The stock is higher. In fact, it skyrocketed after the company won a 1,160 crore mandate from Aadhaar, UIDAI, for establishing Aadhaar Seva Kendras across 188 districts. I think this is for a period of 6 years. Now, do you think, Dharmesh, the stock is attractive? Because in the past, when that, just before the fact that the company didn't qualify for PAN 2, it didn't get shortlisted, the stock was at 1,400, 1,600. And since then, the stock is now down to 900 rupees. At this juncture, is this attractive? And how big could this order be? Today, you've got nearly about 1,200 crore of an order win, but could it expand in size?
Hi, Rima. I mean, the problem with Protean eGov has been, if you look at last 10 years number, it has been a serious decline in the margins from 23% 10 years back to 10% kind of operating margin this company has now. And this order of 1160 crores has to be served over a period of 6 years. So 190 crores is the annual run rate which is coming. And the top line, it's been languishing around 755 crores to 855 crores on an annual basis. So last 10 years is the same story. It has been surrounded by good news flows, and because of that you see stock price traction happening time and again. But I think it's a small company, market cap is also pretty small. So first the proof of the pudding has to be tested. Let it come out with 2-3 order flows, and when book to bill ratios more than 5x, that is a time when one can look at seriously looking at this company. Second is, for such companies the business moat is too low. Anybody who can have a good software in place and good connections can get the business running. So dependency on the government order coming in and getting checked out, as we have seen earlier with the same company, is also pretty high. So to my sense, such rallies are specific day, news flow based kind of a rally. It's not a good investment to my mind.
Okay, all right. Stay with us, Dharmesh, for the time being. Let's hop across to Vivek. He is here to tell us about the MSCI changes and the kind of outflows we're expected for today itself. Vivek?
Well, that's right. So remember, MSCI adjustments will happen in the last hour, half hour of today's trading session. So elevated volumes are what you can expect, especially amongst the inclusions as well as exclusions. Remember, the announcement was made on August 8, 2025, and today is when the adjustment will take place. There are 4 additions this time around and 2 deletions. However, with the weight changes, it's actually a net outflow event as far as Indian equities are concerned. The 4 additions are Hitachi Energy. Analysts are expecting inflows of close to $220 million. Swiggy, close to $280 million of inflows. Wari Energy, close to $220 million of inflows. Vishal Megamart, almost $250 million of inflows. On the other hand, the two exclusions from the MSCI Standard Index are Thermax expecting close to $110 million of outflows, and Sona BLW Precision close to $160 million of outflows. So, given the fact that this was announced well in advance, a lot of it may already be priced in, but definitely you can expect elevated volumes in these names, especially in the last half hour, 45 minutes of the session today.
Right, Vivek, thanks a lot for that. So those are a couple of stocks which will be in focus today on the back of the MSCI rejig. Meanwhile, just keep an eye out on Edelweiss Financial. That stock is up 7%. There was a large trade on that counter this morning as well. Cello World is the other one which is higher. And Swiggy, it's recovered from the lows a fair bit, currently at the higher end of today's trading range so far as well. So pull up Swiggy. For a large part, it was in the red, between around 11:30 to close to 2. Now it's recovered, moved by about 1.5% from the lows today. Dharmesh, do you track the quick commerce space? Do you have a view on Swiggy versus Zomato? Obviously, everyone speaks about the valuation gap between the two, and basis what one's assumption is, they prefer one over the other. What is your preference here?
Yeah, we do track, both the companies and the space as well, but the problem is the valuation part. So Zomato has run its course. Now it's a highly valued company, more than 3 lakh crores of our market cap. And there the things looks pretty difficult to justify the valuation multiple. And most of the profit is coming because of the cash and investment book they are having also sitting on. So the path to profitability may be there. It's look very much visible in the case of Zomato. And Swiggy has been a follower. Whatever they do, they try to replicate. One-off cases can still be there when they have come out with a new product, but essentially it's more of a follower kind of a company. We do feel that though the space looked attractive, but given the valuations at which they are trading, the justification of that over a period of time would be difficult. So more or less for next 2-3 years, I think the stock prices will languish in the range. There won't be a wealth creator from here on, and if the profitability does catch up, then they will come back into reckoning. So till that time, it's more of a avoid, and maybe a trading place can still be there. So we are not now recommending any of the companies, though we have recommended earlier in the past, but now we have recommended for our clients to take profits and be out of the space.
Got that. Thank you very much for that. Lots of other consumption names. Vishal Mega Mart is up in the green. Devyani International has surged 2.5%. Nykaa has gained about 1.25%. So this entire consumption theme continues to be very active. Get into a break. We'll come back on the other side. Vikas Khemani of Carnelian Asset Management will join in on the other side. Stay tuned.
Welcome back. Well, market's not able to actually pull back from the low point of the day, but Swiggy is the one that's swigging it away. That's seen a bit of a recovery from the low point of the day. I think we should get the intraday chart of that particular name up for you on the screen. But there are plenty of stocks buzzing around. Hormuz joins in to turn the spotlight on all the movers this hour. Hormuz, tell us more.
Well, some interesting movers in today's trading session. And start off with some names like Ratan India Enterprises, and this is the biggest single-day gain that the stock has seen since the month of June. 9% higher on the stock today, among the top gainers in the broader markets. It has gained in 5 out of the last 7 trading sessions, and it has moved on strong volumes as well. Over 6.5 crore shares have changed hands today, compared to a 20-day average of just 3 lakh shares. And courtesy of this move, the stock has trimmed its losses down for 2025, down to around 10%. The other mover in this list today is Lumax Industries, and that too has seen gains of around 8% in today's session, snapped a 3-day losing streak today. And the volumes here, before this 3-day losing streak though, the stock was up for 3 days, and during which it had gained around 18% as well. So after this 3-day move, the stock is higher today, and almost 2 lakh shares have changed hands so far, compared to a 20-day average of just 18,000 shares. Now, courtesy of this move, this is the volume volumes that you have seen today are the highest in a single day since November of 2022, and the stock has been an outperformer this year with gains of around about 75%, and the last time it had gained in such an extent was around back in 2017. Now Kolte Patil real estate has continued to outperform. Is the fourth day of gains for Kolte Patil. The last 6 sessions have seen volumes consistently higher than 1 lakh shares in a day, and has consistently moved higher in terms of volumes. 8 lakh shares today compared to a 20-day average of 1.5 lakh, and after this move, the stock has broken above its 50-day moving average and is up 30% so far in 2025. The other mover in this list on the downside is Aegis Vopak, and its latest listing, down 4% today, is declining on low volumes. So the movers on the upside are on higher volumes. This stock is declining on lower volumes, and this is the second lowest volumes in a single day that the stock has seen since listing in June. And in fact, the lowest volumes that the stock has seen was last Friday. Now here we have seen almost 2.5 lakh shares change hands compared to a 20-day average of 5 lakh shares, and the stock continues to hover around its IPO price of 235 rupees a share. And rounding off this list with Vodafone Idea, it's given up half of the 6-day move that it had seen, that gained 20% in the last 6 sessions, down 10% today, and this is the third consecutive session of 100 crore and more shares trading in a single trading session. The last time this happened for 3 consecutive sessions was back in November of 2024, and 124 crores shares today compared to a 20-day average of just around 41 crore shares. And the stock has moved on the lower on the downside on very high volumes now in today's session.
All right, Hormaz, thanks a lot for that. So those are a bunch of buzzing stocks. In fact, to that list, we can also add Unichem Labs, the stock at the bottom of your screen, as Ticker told you that, one of the closures for one of their plants has come in from the US regulator, indicating that all is well with that plant, and the stocks surged on the back of that. But two-wheeler EV maker Ola Electric is extending gains on the back of that PLI certification that it has gotten for its Gen 3 scooter portfolio. Sudarshan joins in with more details on that one. Sudarshan.
So Ola Electric today at one point was up almost 7%, still currently up almost 5%. It's on the back of the company's disclosure regarding the PLI certification that it has secured for S1 Gen 3 scooters. And now with this, its entire portfolio of Gen 2 and Gen 3 scooters are PLI certified. PLI certification for Gen 3 is very important because Gen 3 scooters form nearly 56% of its total volumes. And now company will be eligible for incentives, PLI incentives, and that would be in the range of 13 to 18%, and that would happen till 2028. Now, on the back of that, company is saying that profit is going to improve, and that may happen in this quarter, that is in Q2 FY26. After Q1 earnings, company had told that auto business EBITDA will turn positive in Q2, and in FY26, auto business EBITDA margin is expected to be 5% or more. So we'll have to see if company's comment about the profit fructifies or not. But as of now, stock is higher.
Thank you very much for that. Vikas Khemani, founder Carnelian Asset Management, is now joining in. Vikas, thank you very much for joining in. We knew that 50% tariff, that additional 25% is coming, but it's come. And it's hurting now on the markets. We've anyway underperformed many of the emerging markets. Some would say there was a catch-up because we had outperformed, so therefore it's okay if 1 year you don't get any sort of a returns. But even today, 24,750. How do you expect all this to play out from a market point of view for the next 6 months?
I think if you just take this current events, from a next 6 months perspective, I'm quite sure that in 6 months' time down the line, there will be some solution to it either way. Either we will get used to 50% or it will be rolled back, right? And given the fact that it's not a very significant part of our economic growth, unlikely to derail, as we've been hearing very clearly from the establishment and the government, and today RBI governor, or yesterday RBI governor also made a comment that they will all do what it takes to stimulate the economy. So I think, in my opinion, it's not that bad. All the bad news is very well known. So the markets are holding on very well despite all the bad news being known by the market. I think everybody's been talking about earnings slowdown, tariffs for last 3-4 months. And despite that, markets are holding on. That's telling you something. So in my opinion, there's more upside risk than the downside risk to the market. And in this kind of situation, given the fact that there are no structural fault lines to the Indian economy, growth drivers would come in place, whatever little bit slowdown people are talking about. And as and when that plays out, there will be quick run up in the market. Now, whether that happens 3 months down the line, 6 months down the line, I don't know. As far as our view is concerned, we believe that second half of this year, corporate earnings are likely to pick up, backed by interest rates cut, liquidity infusion, and GST move which government is planning to take. So all those things are going to help corporate earnings in general, and hence it's wise to remain invested into the market. Which point in time market will run and outperform, nobody knows. And if you try to time it out, you will miss that first big up move.
Hi Vikas, good to see you in, and you're very, very optimistic on India's prospects as well as the equity market in the longer term. But in the near term, this earnings recovery is not yet visible, and both fiscal as well as monetary policy support has come about. You think enough has been done now so that the second half of the year will be, we'll see some kind of recovery? Because the good news is our regulators have seen, yes, there is some softness and they're doing something about it, which is very encouraging. Do you expect more measures, or do you think bulk of the measures are already done?
It's never, switch. It's a dial. I think government and the regulators kind of do their job, as the need is. And I think a lot of heavy upfronting or heavy lifting was done by RBI, beginning of the late last year or early this year, in terms of infusing liquidity and interest rates cut. That obviously takes 2 quarters to 3 quarters before it reflects to corporate earnings. Just like this, when the tightening happened, it took 2 quarters to impact the earnings negatively. It takes 2 to 3 quarters to impact positively. And that's what I'm saying. And on the top of it, you are, this current crisis, in my opinion, will also, open the door for significant reforms, including GST being talked about and many more, which in some sense is good for medium term to long term, because in these kind of times only bold reforms gets urgency and gets done. So I'm quite hopeful that government will put some act together and push a little bit more in terms of the reforms which can be boosting the growth. So I'm quite optimistic. Like I said, downside seems to be limited. Upside, as and when that comes, could be very fast and quick. Timing one does not know.
Okay, all right. Well put then. What about a couple of sectors and themes? Pharma is a space where in a couple of funds, I think you'll have an overweight out there. Laurus is one stock that's done very well for y'all. Is that a theme that you like, and do you all think that will continue to do well from here on? I'm looking at some of your portfolio stocks, and you have GSK Pharma, you have Biocon, Laurus Labs as well. Tell us, how do you approach the pharma theme?
I can tell you that we have not made any change given the last 3, 4 months, 5 months of uncertainty, because we think there's nothing which big time has changed in the Indian story. It continues to remain same way. CDMO and pharma has been our theme which we've been playing for 2 years, and it's done very well for us. And we think it's here to stay for a very long time. So nothing per se change. Of course, there will be always short-term noise here and there. You got to ignore that. But structurally, we find it is a very, very promising opportunity for India. I have said many times in our previous interaction that it's kind of similar to what IT was in mid-90s. So when you have this kind of big opportunity, you just kind of buy stock, high quality, leading stocks, and just stay put.
Vikas, I was just reading a recent note which was written by Carnelian Capital, where you flagged a new fad FOMO wave in unlisted and preferential allotment space. So you're basically revisiting 2021 warning, where market cycles often begin with a fad, a hype narrative. It's followed by FOMO, fear of missing out, and they end in fade, where excitement disappears and prices crash. And you're giving some examples, for instance, in HDB Financial, because pre-IPO it was trading at, it was being offered and bought and sold at a much higher price, and now it's trading at much lower levels. And even in others like Swiggy, Vari Energy, etc. In the listed universe, are you seeing any overhyped sectors?
The reason why we wrote that note, Rima, you brought it very well, that time and again, these kind of fads do come in last 12 months specifically. We have noticed that, being, by unqualified investors who don't understand, buying private has become a fad. Everybody wants to buy out. And without understanding the company, its business, I think most of the time people know only the share price. If you ask them, even market cap would not know. And very, very reasonably large, wealthy people But the reason why they're buying is because everybody's buying, and there's a lot of fat. And I think we've seen significant amount of value getting lost and eroded. Otherwise you will not buy. The price discovery is to be done by the qualified people, not by the retail. And that's the kind of big point. So I think right now, 2021, we saw same thing was happening under the name of new tech, and every company was getting listed, and a lot of people lost money in that. We've seen in after 5 years also, they haven't generated kind of good returns. Today, similar thing is happening in the private space, preferential allotment. So that's a note which is basically warning or kind of giving early warning to our investors that be careful, protect your capital, don't be part of these fads. And these things do happen very often. In preferential allotment is like in the listed, typical template is stock goes up and you're offered at a discount. People think it's a discount. Actually, this is a manipulated stock price. So this is happening, especially in a very smaller market cap companies. And one has to be very, very careful about these kind of, sort of setups in the market. We think that investing, you have to keep risk reward in mind. You have to try to protect your capital. You have to avoid these kind of mishaps. That's the kind of aim of this note.
Thank you. So very broadly, yes or no, should one stay away from IPOs because they are being offered at a higher price to begin with?
No. Again, this is a very broad base. It's like this that do you think everything in the market is bad? So IPOs, see, we don't disrespect IPOs. IPOs are a great place to get new access to the great companies, right? Only problem is that when they come in a good market, they come overpriced and they come hyped. So in fact, we generally start with a negative bias. Only we invest into IPOs which are coming, in exceptionally good businesses at a reasonable valuation. And most of the time we start with the no, and then we see why we should be investing, because they are hyped, they're overpriced. And if you see, go back and look at companies got listed in last 2-3 years in the hype time, and you will find them, once the hype settles down, either you see prices correcting. So those are the times when you revisit some of the companies, because those companies could be very good companies, no doubt about it, but they may not be good price to get in or right way to get in. So you got to kind of evaluate completely fundamental bottom up basis, whether should I invest into that. Per se, you can't say IPOs are bad or IPOs are good. It is about a company, it is about a business. But yes, in general, in good markets, IPOs tend to get overpriced, overhyped.
Indeed, there is no blanket rule that one can apply. Thank you very much for joining in. Let's talk about Maruti Suzuki. They've launched the latest electric vehicle, e-Vitara, in Ahmedabad today. R.C. Bhargav, the chairman of Maruti Suzuki, spoke to the media after the launch. Listen in.
What we saw rolling off today with the PM flag, that's going to get exported.
But when do we see India sales start, sir?
When do you see the export date? Does anybody know the export date?
All within this month.
Well, it can't be very long, because we don't want to keep the cars in inventory for a long time.
Okay, that's gotten Maruti excited today, this development. But Nigel has now moved over to the big wall, and he's going to tell us about all the futures and options trends from the F&O desk.
Well, extremely weak trading session, Reema. And if you look at the screen, the last few minutes, we've gone ahead and we've breached the 20 DMA on the Nifty. All through the trading session, we managed to defend that level. And the last few minutes, we've just breached that mark. By the end of today, you'll hope that maybe, in fact, you see a 20-30 point bounce up. At least you defend it on a closing basis. Moving to the Nifty Bank, that's where the problem pocket is. So we broke that 20 DMA. The fear is that if we're going to be seeing a sharper correction, then there's another 1,500 points thereabouts to go, which will take us to around the 200 DMA. So for the time being, breaching the 20 DMA has already signaled that the Nifty Bank, that's the one that is seeing some kind of weakness. Moving to the options data. Now, the call writers, they are back in the game today. If you just take a look at the 24,800 call, just take a look at the premium out there. It's gone down by close to 80% in a single trading session, because the bears believe that these higher levels are going to get protected. For those that are writing this strike, well, they'll be looking at the 24,950 as a level, which can get protected. The 24,900 call as well, just take a look at the premium. From around 130 rupees, it's down to around 22 rupees. So there's a writing that we're seeing at those levels. Going by the options data, 25,000, 24,950 level is what the bears don't want to see, and we have expiry that plays out on Thursday. On the downside, this 24,750 put, it was seeing some writing, but there's a mix of activity now. Because at the start of today, the premium was only around 15 rupees. Now it's moved up to around 70 rupees. So those put writers, well, they'll be making some good amount of money. So that explains why the PCR has come down drastically to sub that 0.8 odd level. Moving to individual stocks then, massive shorting is what we're seeing on Sun Pharma. Take a look at it. The stock is down, open interest build-up has swelled up. There's an element of rolls as well that we're seeing out there. But on the buying side, you have ITC as well as Nestle India. Both those two stocks are holding on to their own, and both of them are seeing a good amount of open interest build-up. And finally, Titagar, that's the one that you should keep an eye out on. There is an element of rollovers over there towards the end of the series as well. And also there is some shedding of open interest. So Titagar is likely to be the stock that comes out of the F&O ban, which explains why that stock is holding in the green. Back to you.
Thank you very much for that. And markets have slipped some more. We were down 200 points when we started the trade. Now we're down 250 points and closer to 24,700. Asian Paints has extended itself into the red. Trend is now down more than 2.25%. So these are stocks which are at the day's low. Look at that fall that you're seeing in some of them in the last 10 minutes or so. Reliance Industries too is down close to about 2%. Bajaj Auto, IndusInd Bank. So the selling pressure has picked up. Expiry, remember, is on Thursday, and tomorrow Indian markets are shut at 9:30 a.m. The additional 25% tariffs on Indian goods to the US come into effect, taking the total tariff to 50%. Get into a break. On the other side, we'll get you a few BTST calls from our technical experts.
Well, there's a sudden bout of sell-off that has come in the market. In the morning, it was threatening to break the 24,800 mark, and now it's slightly below the 24,700 mark as well. And this last, 10 or 15 minutes of selling have been extremely sharp. They've come in names like Reliance. So pull up the intraday chart of Reliance. That heavyweight has slipped to the low point of trade. Alongside that, we've seen a fair amount of selling in names like L&T as well. So L&T comes up for you. And the consumption stocks, which are actually doing well, pull up something like an Asian Paints. That has come in for some profit booking. Trent is lower. And alongside that, we have a couple of these two-wheelers as well, Hero MotoCorp and Bajaj. Both of them, which were doing well in trade, have now slipped into the red and fairly well around the lower end of today's trading session so far. So pull up Bajaj Auto. There you have it. A sharp gash is what we've seen. Below 24,700 for the Nifty right now. Ashish Kayal joins us back again for a tomorrow trade. Ashish, before that, it was a 24,740 mark that you were looking at. The Nifty has broken that, and an accelerated sell-off that has taken place thereafter as well. What does one do on the frontline index? And then you can tell us your tomorrow trade.
Hi, Mangalam. See, like we discussed, use pullback to sell, and we were expecting a target of around 24,690, 24,650. We are already at 24,690. I was expecting it for tomorrow, but it happened now itself. And when we were talking, Nifty was somewhere around 24,780 odd marks. So overall undertone as of now is bearish. We are attempting to fill the gap. Shorting now is not going to give a good risk reward because there is not much room. There is a support kicking in around 24,650 odd levels. If you get an index around 24,750 odd marks, 24,770, 780, that's where you can look forward to sell. On the upside, again, 24,900, 24,880 is the stop loss, and then aiming for 24,650. Sell on rise is the strategy on the index as a whole. But there are certain stocks that are outperforming, and the BTST idea is going to be from, we can clearly see Swiggy. Swiggy has shown a very smart move on the upside. And even in today's session, we can see that the stock is managing to sustain positive by 1.5%, and it can move higher from here as well. Zomato, we can clearly see, has done exceptionally well, and Swiggy has a lot of room to catch up. So one can go long on Swiggy, maintain a stop loss of 418 on the downside, and on the upside for Swiggy, we can expect a target of around 455 levels.
Okay, all right, Ashish, thanks a lot for joining in and filling us in with all of those details. Well, Rajiv Anand has taken charge as MD and CEO of IndusInd Bank. Ritu Singh joins us to tell us about the challenges that Anand may face while rebuilding the bank.
Well, it is official. Rajiv Anand has finally taken charge as the MD and CEO of IndusInd Bank with the Reserve Bank of India's approval for a 3-year term. We were the first to report that he was the front runner back in June, and now the financial markets veteran with more than 35 years of experience has stepped into the hot seat. A chartered accountant and commerce graduate, he's best known for his expertise in capital markets, from starting as a trader at HSBC to becoming the CEO of Access Asset Management back in 2009 to more than a decade at Axis Bank, where he rose to the DMD position before retiring earlier this month, Rajiv Anand brings with him both retail and wholesale banking experience. But at IndusInd, he inherits a bank at a crossroads. After its worst ever quarterly loss in the fourth quarter of the previous fiscal, triggered by the accounting lapses, the lender did bounce back in the first quarter of this year with a profit, but there have been casualties in the form of top-level exits. The bank's chairman Sunil Mehta, though, has assured investors that legacy issues are behind and irregularities are fully absorbed, and laid out a 5-point focus plan which includes profitability first, tighter cost discipline and so on. But for Anand, the task is very steep: to stabilize the bank, rebuild its reputation, fix internal controls and restore investor confidence. He must also steer a 30,000 crore rupee capital raise to shore up the bank's balance sheet while managing regulatory scrutiny, including the ongoing investigative probes. So the near-term focus is clear: reconstitute the leadership bench, even as the longer-term test is going to be the execution of the strategic roadmap that he lays out.
All right. Ritu, thanks a lot for that. So that's a profile of Rajiv Anand and his plan for IndusInd Bank. For now, just watch out for the frontline indices, and that's because of the worry, the uncertainty around Trump's additional tariffs on India, which kick off tomorrow morning. Let's listen into what Mark Mobius, the chairman of Emerging Opportunities Fund, had to say on how this could impact the Indian market and economy. For a usual India bull, Mark Mobius was fairly cautious this time around. Here are his views.
India will be okay, even though it will hurt some industries. For example, pharmaceuticals would be hurt because about 40% of pharmaceuticals exports go to the U.S. The garment industry, of course, will be hurt because a big portion of their exports go to the U.S. Jewelry, gems, that sort of thing will be hurt. So those are the three industries, I would say, which will be most hurt by these tariffs. But overall, we would see maybe 0.5% to 0.75% cut in the growth rate of the Indian economy. In other words, instead of going up by 7 or 6%, we might see 5.8 or 6.1 in terms of economic growth for India. So generally speaking, it's bad for India, but it's not disastrous. India's got an incredible domestic market, and more, you're going to see the domestic market taking over from exports and other growth factors in the Indian economy. So I believe that India still is in very good shape. And even despite these problems with trade with the U.S., which I think at the end of the day will be solved, they will come to some agreement and in some future date, not maybe within the next few weeks or months. Nevertheless, even with these high tariffs from the U.S., I think the Indian economy will still be doing very, very, very well.
Welcome back. Well, as promised, let's get Jay Bala of Cash the Chaos, who joins us on the show. Jay, what's going on? Markets today at the low point of the day. Do you think we are forming a bottoming out process? And do you believe we bounce from here? Tell us the levels you're tracking.
Hi, Nigel. Thanks for having me on the show. I think the markets moved from 24,337 to 25,153 was the first leg of the bounce. I would have wanted market to already be about 25,330, at least on intraday basis. But the fact that markets have come down is a little bit of caution, not too much. But I think the markets, the August low of 24,337 is likely to hold. In the unlikely event that the markets were to go below 24,337, we are looking at a deeper correction somewhere close to 23,500, but that's not the primary case. So as long as the markets can hold about 24,500, I think the 24,337 low of August is likely to hold. And we are looking at fresh record highs in any case from a 6 to 12 months perspective.
But it's looking quite worrying, Jay. Just look at the screen. It's looking quite worrying out there. But you're saying that we're forming that kind of process where we actually bounce back from here. We got that correct, right?
That's right. That's right.
What about the Nifty Bank? That's been the
FMCG, Nigel.
Yeah.
They are showing. They are coming to bat for the bulls. So that's a positive sign. IT has been a laggard. The fact that IT is trying to turn around itself, and stop falling, that itself is a positive. And autos is extremely strong, even with today's pullback. It's on a very strong wicket. So the markets are, on an intraday basis might look shaky, but I think it's likely to get resolved higher very soon.
And what happens to some of the other heavyweights? We have the consumption stocks which are doing well over the last few sessions. So if you have a call on the FMCG index, and the second one is Reliance. Ahead of AGM, brokerages are getting slightly positive on it. The stock's done decently well this year as well, up nearly 14-15%, but nowhere near its record highs right now. Where do you think that one goes?
Yeah, the FMCG is having its counter-trend bounce. There are outliers like Colgate, which are actually could be outright bullish. But when it comes to Reliance, the support at 1364 to 1350 is very crucial, and that's the important player for the market. As long as Reliance can stay up, I think the markets can do pretty well. And again, just like the Nifty, or in fact, the Nifty is just like Reliance, the move from the August low to the recent high of about 1431. That looks quite bullish for Reliance. Let's see what it does. But as you pointed out, Reliance is very crucial for the overall market.
Okay, all right. Let's talk about, a couple of stock picks then. What do you have for us?
I have two stocks, one from the cement space and one from the capital space. So basically, Shree Cement's I'm quite bullish. It's had a reasonable correction of the 52-week highs. And I think the low at 29,300 is likely to hold, possibly heading to fresh 52-week highs past 33,500. The second stock is Linde India, formerly BOC India. This I had picked up for CNBC in the month of May, to be precise, around middle of May. From 6,600, it went to 7,800, and now it's pulled back from that 7,800 high to 61.8 Fibonacci retracement and starting to bounce from here. And the longer-term picture for the stock is also very good. So if the low support at 6,100 is going to hold, I think we are looking at a very strong move, initially past 7,800. And if it goes past 7,800, I don't think it's going to stop there, possibly heading to fresh all-time highs.
Just looking at two stocks, Jay, before we step into that short break and go into market close, we have Deepak Nitrite, which at a time when the market is actually moving towards the lower end of trade, that stock spiked to the high point. So pull up the intraday chart of Deepak Nitrite. That stock's actually gained most of its numbers this week. Today itself, it's up 2.5%. Obviously, the last couple of days, it's not moved much. And the other one is Dodla Dairy. That's the other stock which is up nearly 5%, 6% off lows. Even as the market's moving lower, we have these stocks which are doing well. And we have Vari Energies as well. Vari Energies has too surged to the high point with a gain of almost 5.5%. Any of these names that you like? There's Dodla, Vari, as well as Deepak Nitrite. If you track them, like them?
Let's see, Deepak Nitrite is trying to put in a huge base. It's forming a base around 1780 odd levels. But the structure isn't too good. But if it can manage to hold about 1780, it's developing into a huge price structure. But Vari is a very illiquid name. Probably I'm looking at Vari Technologies. So I don't track it so closely. Dodla, again, that's a much better looking chart, and it's got short-term higher highs to come through. As long as the stock can hold about 1250, I think that's looking good for fresh 52-week highs.
What about gold? Will gold continue to shine from here, or is silver looking better?
Silver is looking a shade better than gold. Gold has been stuck in a range for 12 weeks now. Watch the London fixing. If it can cross about 34.40, gold will also start getting bullish. But if London gold, spot gold, were to drop below 32.67, 32.50 odds levels, I think there will be a downtick first, a sharp downtick first to somewhere about 2,900, and then fresh 52-week highs. But so the range is very tight for gold. It's been stuck there for the last 12 weeks.
What about some of these paper names? Yesterday we saw a big spike, and today there is a sharp bout of profit taking. So pull up, something like a JK paper and the others. JK paper is now down 8% after a near 13-14% rise yesterday. The reason why it's lower is because, the MIP which has come, the minimum import price which has come, on virgin paperboards, as the management told us, accounts for just 10% of the overall market. So the overall market in India is close to 250 lakh tons, of which virgin paperboards is just about 20 lakh tons. So less than 10% of the market, of which the leader is obviously ITC. But the others as well, they have about 20-25% sort of market share, but not too big in terms of their overall contribution. So that's about JK Paper. Jay, actually, we'll continue this conversation with you on the other side in Markets Forward. But for now, let's wrap.
Yeah, that's right. Let's wrap up on today's trading session. It was a weak one. The Nifty goes home with a cut of around 250 points. We breached the 20 DMA on the closing basis. Structurally, things not looking very, very good. A whole host of factors played out today. Trump's tariffs, you had a truncated week, you had the weekly expiry that will play out, and you had the MSCI selling as well. Sentiment seems to have taken a little bit of a hit, and that's why the markets were down. Breadth of the market, you had just one stock that was advancing for around 3 stocks that were declining. But mind you, from the broader market, there were a few stocks that did do well. Case in point being Protean e-Govern on the back of an order win. You had BLS as well that did do well because of the order win. Vare Energies towards the end of trade, that did surge up in trade. Vikram Solar was the other one that was up close to around 7.5%. And Ola Electric as well. That one said that PLI benefit will gradually flow through, and that's why those stocks did do well. Today, we did see that a lot of these domestic-facing FMCG names did do well. So you had HUL, Nestle, and ITC that held up. From the auto pack, Maruti rolling out their first electric vehicle from Gujarat, so that stock did well. And the Royal Enfield was thumping ahead in today's trading session. But sentiment did take a hit.
Sentiment did take a hit, Nigel. I'm looking at a couple of these names like Sun Pharma, which was lower on a brokerage comment. We had Tata Steel, which was lower. Bajaj Finance as well ended lower from the frontline pack. Vodafone Idea giving up nearly all the gains that it saw in the last few trading sessions on hopes of some sort of relief coming in from the AGR dues, but that's not the case to be. That stock down by about 9%. And a big gash is what we saw in Balrampur Chini as well. And Zydus Life too on the back of a brokerage note. We were talking about the paper stocks, which opened lower and thereafter continued their slide downward. So JK Paper, for instance, ended about 8-9% lower. We had West Coast Paper, which was lower as well. And in the commodity space itself, we had Balrampur Chini, which was down by about 6%. But on the way up, we did see Edelweiss Financial on the back of that large trade doing well. Protean e-Government, you did allude to that, and we did see some traction in names like Dodla Dairy and Britannia as well, which ended with a gain of almost 3.5%. So some stocks gaining a lot more, losing, and a lot more taking place when it comes to the overall sentiment in the market, international news, and domestic news. With that, we wrap up on this edition of Closing Bell. You stay tuned to CNBC-TV18 as Markets Forward comes up next.